amid a housing shortage and affordability concerns in this country, we've been keeping a close eye on some of the factors influencing home prices and supply. And as we look to the new year, what other trends and changes in real estate should we be watching out for? For more, let's bring in John Pasalis, president and broker of Realosophy Realty. John, there's some really interesting factors out there right now that could influence things. And one of them is coming from, we'll bounce from the U.S., where there was a lawsuit, a class action lawsuit, where the issue was the commissions that brokers were being paid. And in this lawsuit, the jury found that they had colluded to on the broker's fees, and that there had to be damages paid of $1.8 billion, I believe. Exactly. And there's actually a lawsuit underway in Canada that's similar to that. It hasn't been certified yet. But I bet this is something that you've been watching pretty closely. What do you think of it?
I mean, it's huge. And there are actually more lawsuits coming up in the United States. And the core issue here is that they're arguing that the real estate industry is conspiring to keep commissions high because they effectively force the seller to pay for the buyer's agent's commission. And they're basically saying, well, that's not fair. You know, in Europe, in a lot of European countries, the seller only pays for their realtor. If as a buyer you want your own agent, you have to pay for them. And this is the heart of the issue, and it's quite significant. And if the seller doesn't end up having to pay the buyer agent's commission, it can completely transform the whole industry.
So, yeah, when you're in that process and the selling process, there's a form that you sign that says how much you're going to pay your realtor and pay the other realtor, and it's sort of just filled out for you, isn't it?
Effectively, yes. So, I mean, in Europe, for example, sellers might pay 1.5% or 2.5% to their agents. In North America, it's closer to 4 or 5% because there's that additional 2 or 2.5% that almost always goes to the buyer's agents, right? And this is what many people are trying to fight against and say, well, why should we have to pay the buyer's agent? They're not working for us, they're working for the buyer.
Right. So if this class action in Canada does end up getting certified next year, then we'll watch it as it progresses. But what do you think the fallout of it could be?
It's really hard to say because, some of the settlements in the U.S. just required the brokerages not to be members of the big umbrella organization of National Association of Realtors. The worst case scenario would be that if they effectively make it illegal for the seller to pay the buyer's agent's commission, because that will transform the industry. So it could have sort of minor impacts, or it could have quite significant impacts depending on what the courts decide.
Do you think that we could, organically see agents having more conversations with their clients about these fees, if they're also aware of the possibility that this is happening? We
are seeing that now. So over the past, I'd say 5 to 10 years, what's happening is some buyers are going to their agent saying, listen, I know you're getting paid 2.5 or 2.5%. We want a rebate. We want X thousand dollars back from the commission if we buy with you. So some people are already doing this. The question is, why should the seller have to pay for that? Or why is the buyer negotiating a rebate? They should just be negotiating the commission up front.
There was another change made in Ontario at the start of this month when it comes to the bidding process. So giving the option that sellers can make it more of an open bidding process. And I wonder what you think of that change, and whether that's something that you think sellers will actually be exercising in the new year.
I think in some cases, I don't think it's going to make a huge difference. They basically gave the seller more tools to potentially squeeze out a little bit more money. And they basically said, if it's in the seller's incentive to disclose the offers, they will. And if they don't want to do that, they don't have to do that, right? So it's not an open offer process because it's entirely at the seller's discretion. They can decide what information to disclose and when. I don't think it's going to have a huge impact. I think for a lot of sellers, almost keeping it blind is in their best interest. Usually, it's only when maybe 2 offers are very close that they might disclose it.
So, I mean, that's interesting. The seller being able to squeeze out a little bit more. That doesn't seem like how this sort of change would be sold, in the sense that open, bidding should be more, to help the buyer side of things, perhaps. But you think that it could actually be in favor of the seller?
100% it is. Yeah. I mean, it would be an issue that is more about transparency if it was required and every offer and details were disclosed publicly on some platform, and everyone can see everything. But the way they haven't done it that way, they basically made it at the seller's discretion. Seller can pick and choose what information to disclose and when, and they can even change their mind mid-negotiation. So it's definitely a tool for the sellers, but it wasn't framed that way. It was kind of framed as we're going to make things more open and transparent, but they're really just giving more leverage to the seller.
I wonder if this one will be another one that you think maybe there will be attention paid to in the new year as well. And that's when it comes to corporations buying housing and then renting it out, because the Toronto Star was reporting that this one particular company that we heard about a couple of years ago, buying up a residential property to rent them out, is planning to add more to its portfolio, about 10,000 more homes, I suppose, to their portfolio in the next 5 years. What do you think we could hear on that one?
Well, I mean, I think that could be a massive issue. And I think, again, the interesting thing about Canada is that we have our neighbors to the south who are always years ahead of us. You know, they're years ahead of us in this commission lawsuit. They're years ahead of us in the role that institutions play in buying up homes. In the Sun Belt in the U.S., in Texas, for example, hedge funds buy up about 28% of the homes for sale. You know, in Texas is this one region where prices should not be increasing rapidly, and they are. And part of it is you have big companies buying up homes down there. Yeah,
so we're just looking at one of the graphs from your recent report. John, can you just tell us a little bit about what we're looking at there?
Yeah, so we're basically looking at the year-over-year growth in house prices in a number of cities in the southern United States. And these are cities with an elastic supply of housing. Basically, it means that, you know, the builders can build, and ramp up supply. And yet we're seeing home price appreciation that actually mirrors Toronto, which is a supply-constrained market, right? And these areas definitely, you know, Texas has a population boom, much like Ontario does and Canada does, but they also have this additional factor where you have these billion-dollar companies buying up homes. And when you have billion-dollar companies competing with small homeowners, I mean, the companies are going to win because they have more leverage and power.